Right, James Knightley is Chief International Economist at ING. He's joining us right now. James, good morning. Good to have you with us here. Thanks very much. So there are two big talking points today. There is, of course, the elections here in India, which we will get at least a glimpse of directionally because exit polls are tomorrow. And they'll give us a sense of which way polls essentially have captured how voters have gone, which way voters have gone. And the second one, of course, is this news from overnight where there is a conviction for, former U.S. President Donald Trump. I want to start with the second one, which is the Trump conviction. Just your thoughts, James, on this one. Sentencing, of course, is just before. There'll be an appeal, I'm assuming. But do you think there'll be more of these cases before the November election, or you think this is it? Your sense?
Well, there are more cases in the pipeline. It's just whether they will get heard in time. We are not that far away, really. And of course, with the sentencing coming up, that's going to take priority. But in general, I guess the key story is: does this impact the prospect of Donald Trump's election campaign? And it's really very early to say. But there have been various surveys done here in the United States, and one of those was by CBS, for example. And they suggested that 15% of Republican voters would perhaps have another think as to whether Trump is the right candidate if he is indeed convicted. So we'll be looking really to see if that does start to weigh on his popularity in the opinion polls, and whether we start to see Joe Biden start to push ahead once more in those presidential election campaigns. I mean, that is going to be a big story for next year, because there are some clear differences between Donald Trump's main economic messaging and Joe Biden's main economic messaging. I think there are four key stories really here. One, of course, is taxes. Tax cuts are wanted by Donald Trump, not wanted by Joe Biden. We've got tariffs that Donald Trump wants to really accelerate and spread out across the world on imports into the United States. Thirdly, of course, he's got controlling of immigration. He wants to really restrict that. And then fourthly, we've got geopolitics as well. Trump is going to solve Ukraine and Russia in a day. So there's some really marked differences. So this could have some quite profound impacts on financial markets as we head towards that November election.
We have a big election happening in India as well. One where the incumbent government, in all likelihood, could come back into power. And perhaps that's something that the street would like as well, given continuity of policy action. How are you feeling about India now, given the economic context?
Well, as you say, continuity is normally the market's friend, and that is what the market is anticipating once more. I think in a global context, we are seeing quite a lot of election risk this year, and not everyone is going to get re-elected around the world. So we are looking at some changes, perhaps not in India, but we certainly are seeing that prospect for change as a strong possibility here in the United States. And I think that global backdrop is going to really be the fundamental story behind where overall market direction is likely to head.
Hi, James. Morning. Nigel on this side, and good to see you win. James, a couple of months back, you were in minority, actually, when you said that the Fed will be looking to cut only in September. And that seems to be the base case as of now. So you're spot on that front. What do you expect the Fed to do in terms of rate cuts for this calendar year itself? And what about 2025, if you could give us the trajectory? And expectations for the PCE data as well later today. Yeah, I mean, the market's pricing for Federal Reserve rate cuts has shifted dramatically this year. In early January, we had nearly 7 25 basis point rate cuts priced. Now we've only got one and a bit, really. We still think there's a chance that the Fed does do more. And part of that is down to the inflation backdrop. I think for that September rate cuts that we're anticipating, we need to see three things. And one of those could happen tomorrow with that core PCE deflator. I think, in terms of that core PCE number, we've got 5 months, really, 4.5, 5 months until we get that September policy meeting. I think we need to see at least 3 0.2 month-on-month core inflation prints. We've been averaging 0.3. That's still too hot. We need to see 0.2s coming through, and hopefully we will see one of those tomorrow. Secondly, I think we need to see some evidence of consumer spending softening. The retail sales numbers lately have been a little bit disappointing, and the evidence from various surveys have also pointed to a bit of a cooling coming through. So if we see more evidence of that,
my confidence in a September rate cut will be increased. But thirdly, of course, we've got to remember that the Federal Reserve has two targets. It's got a target for inflation, but also it's targeting maximum employment. And if we see the unemployment rates start to tick even further higher, remember we've got the jobs report next week, that could be another catalyst for the Fed to cut. We've gone from 3.4 to 3.9% on the unemployment rates. If we break above 4, say get towards 4.2%, I think that slack, if you like, in the labour market would give the Fed the confidence that it can cut. So those three things, we're looking for a 0.2. Hopefully we'll get one of those tomorrow for core inflation. We're looking for that cooling of consumer spending, but also importantly, we're looking for that jobs market cooling as well, with the unemployment rate probably pushing above 4%. And that, I think, could be the trigger that delivers that September rate cut.
Okay, we'll let you go on that note. Thank you so much for joining us and giving us your quick take on both international as well as the domestic economic trends. Thanks for that. Let's